Okay, this is one of those hot topics. For those of you that don't know, our friend Tom is going to get up tomorrow at breakfast and tell you more than you want to know about this topic. But because breakfast is early and we're in Reno, and y'all might be down at the casino a little longer than you wanted to be tonight, we're going to get into it a little bit here because I really find this to be quite something that I wanted to know about personally. So, what to do, what to do, what to do? Who wants to take this lead on this one?
You're teaching the class.
I have one word for you, triage. That's really what it's about now. It's figuring out which clients have material issues and have to file a protective claim by July 10th, 26.
All right, Tom, before we go any further, why? What is this case about?
See, now you're going to get me going. All right. Long story short, was the COVID postponement 60 days or 3.5 years? That's really what it comes down to. If it was 3.5 years, as the court federal claims in Kwong held, then that means if you late filed, late paid from January of 2020 through July of 23, you really didn't, because everything was postponed during that period, payments, filing, to July 10th of 23. So if that's the case, the refund statute was also told, if you use the rationale in Kwong, 3 years from July 10th of 23, July 10th of 26. So in order to have a timely refund claim, you got to file it by July 10th of 26. Generally, in most cases, there are exceptions.
I have a question, Rick. So you say July 10th. Does that mean IRS has to receive it on July 10th, or can I give it to the post office with a receipt, or can I put it in the mailbox outside my office?
Whoa. He's causing trouble already. Here we go.
I want to start with that mailbox outside my office first. Mark, you're aware.
I know they had a little change in postal rules.
Yeah, it was December to New Year's Eve or Christmas Eve, I think it was, right? Tell us about it.
So yeah, the post office changed its rules for how they're going to stamp a postmark on a letter, and it's when it hits its primary processing facility. So I put that letter in my post office box outside my office. It doesn't get to the primary facility in another city for 2 days. I get the postmark 2 days later. And so that was my question to you, Tom. Do I have to go to the post office, and is that even good enough, or does IRS have to receive it?
So best practice is 7502, timely mail, timely file does apply to refund claims. That's one. Two, best practice is to get the certified mail and have it stamped on or before at the post office July 10th of 26. Because when you retain that little green thing that they give back to you with the stamp, that's your proof of timely mailing. That's your proof of timely filing. So think about it. If we're talking a multi-$1,000 claim, it's worth it to get the stamp to verify it's timely filed.
Now, what's another 100% of the original of the 82-cent stamp, right?
Right.
So, Tom, let's take this one a little bit further, because where do we start looking? I mean, is it worth talking about a client that maybe had a small penalty or a small late payment, or is this something that we should be looking for the big dollars?
Right.
You know, what's maybe a threshold that we can give? Because remember, folks, what date did he give us? We have 4 weeks at this point. Not even. Not even 4 weeks.
How many people in this audience have an IRS authorization on every client going back to 2020 and can look at every account transcript? I mean, I do. But if you don't, then you have to triage. And so the key is looking in your tax software to spot potential areas of clients you may want to investigate further. You know, an easy one are people with significant estimated tax payment penalties, right? So say, for example, in 21, on the 21 return, they had a, I don't know, I'm just making a number, $3,200 estimated tax payment penalty. I may want to take a look at that because that may be subject to relief. Somebody who filed after April 15th on extension or not with a big balance due, we're looking at failure to file, failure to pay interest. So that may be a client you want to look at. And this data is available in your tax prep software. And then what you do is once you've identified the opportunity, have the client self-retrieve their account transcripts on their online account. If you don't have time to do authorizations for them, because you only have a couple weeks left, look at the account transcript and then see what the situation is.
Now, Tom, if I remember the Kwong case, they were not talking about a return from 2020.
Correct.
We were talking about payments that happened during that time for balance due, I think of 16 or 17. Is that correct?
So what happened in Kwong was the taxpayer submitted refund claims for penalties. The IRS denied the claims, and the question was, and then he filed suit in federal court to try and get a refund. So the question in Kwong was the 2-year statute of limitations period to file a refund suit in federal court told during the COVID postponement? And the Kwong court held yes, because the COVID emergency declaration and then the subsequent removal of it, that entire 3.5-year period told pretty much all tax actions throughout the US. But they're appealing it, of course, so it would be a protective claim if you're filing it now as a refund.
So now, Mark, would you think about your clients that you're dealing with that have collection issues that date back pre-dark times? I like to call it dark times. Pre-dark times. Would you look at those cases potentially?
In the collection cases, certainly, because there's always penalties and always interest on these balances due. And that's what Kwong's giving us a break on. Even people that had, and it's not addressed in the Kwong case itself, that had assessments pre-pandemic, but were still accruing interest during this 3.5-year period, may be able to avoid that interest. So there's lots of definition that's still out there. So we may get a decision eventually in the Kwong case that is final, that gives us relief in some areas, but not others. It's a real unknown, which I was actually going to ask you that question, or pose it to you, because you said you get paid in full from every client before you start. So are these significant triage operations? Is this an hour? Is this a day? What does it take to actually engage you to do this? And I'm not asking you for $1, not for myself.
Well, so the truth is, all of my clients are on monthly subscriptions, right? So I have access to all of their data, and I'm actually including these claims as part of their subscriptions for people who are on my highest level subscription. If they're on the lowest level, I'm charging them a flat fee to cover some of the costs. But they're still paying me well for the work I'm doing, so I'm not too concerned about the price for my client base right now, personally. But
how would you advise the viewers? What should they be looking at in their investment in perhaps time and resources to start this triage process?
Right. So they basically, I think the first step is to look in your tax prep software and identify large dollar issues, because here's the truth. Somebody has an $85 estimated tax payment penalty. Who here is going to spend 2 hours to get that relieved? I mean, but what would you have to charge? It doesn't make sense. There's no value proposition for the client at that point. So in your firm, you need to decide what is your materiality threshold, because some small dollar claims just don't make sense for your time or the price you would have to charge. And I don't know what you all charge. I hope you all charge your worth. As you know, I will say that. But you need to decide what makes sense for your clients. Also, you don't have time. If you have thousands of clients, you don't have time in 3 weeks, if they're all refund claims, to do hundreds of claims. So again, it's kind of triaging where you can have the most benefit at this point.
Okay, now, Laura, go.
I have a question that I don't know if people out there are asking either, and I hope you have the answer. I don't know. I have a number of clients who have appeared out of the woodwork, people I thought went elsewhere. No, they just haven't filed a return since 22, 23, 24. I have polled and I've had a lot of people say these people came out of the woodwork. Do they have any relief filing now in 2026 regarding that 22 and 23 return?
So here's the thing. There's actually a couple of issues here. Let's talk about if the return has a refund. Okay? No penalties. We would all agree on that. So if you take the Kwong rationale out, that refund claim on that original 21 return, if filed by July 10th, may still be timely, right? Because if the refund 3-year period for the refund statute was told July 10th, 26. So you could argue that that 21, 22 refund is still timely if filed by July 10th, 26. Second issue, unpaid. Well, here's the thing. If there's a balance due, we have interest that accrues from when? The unextended due date to whenever you pay it. So let's just use a 21 return. 4/15/22 starts interest, failure to pay. But that's during the Kwong period. So you could argue anything from 4/15/22 to July 10th, 23 shouldn't have run. But after that, the postponement ended. So that would accrue. So your relief claim would only be a portion of the accrual, not the entire amount. But here's the other issue, and that gets back to what you were saying. If you file that return now, they haven't paid it, I'm assuming. It's an abatement claim. It's not a refund claim. So it actually doesn't have that July 10th, 26 deadline. That's for refunds. I have a lot of clients who haven't paid the IRS in years. They have big balance dues with no payments. They're not time sensitive. As long as they don't pay it off right now, I can request abatement and reduction of that balance at any time. So maybe I'm going to wait to see what the appeals court does. Now, if the IRS levies them and pays it off, that triggers a 2-year clock to request the refund. So not all claims have to be done by July 10th, 26. The ones that are the ones where you're asking for a refund. That's the key that you have to prioritize.
All right, Tom, I got one for you because I'm just take this one step
Oh
further.
boy, here it comes. All right.
Only because you brought up the client that's maybe not paying at all or dribbling the money in.
You mean like my typical client?
Right,
Yeah,
exactly.
okay.
I know that I have had success in the past with my clients that have payroll tax issues to make any payment towards the trust fund portion first.
Right.
Now we're allowed to do that. Can a taxpayer making any payments during this debatable time make their payments towards the balance, the tax liability first? Is there a mechanism to do that? And if so, how? Because wouldn't that help this difference between the outside of that time frame, penalties and interest? Does that make sense?
Yeah, so if they haven't, so you're talking specifically about payroll taxes.
Well, no, I'm talking about even income taxes. Is there a way to any tax liability?
Okay. So if I have an unpaid balance for 22, let's say it's, I don't know, with tax penalties and interest, $30,000. Okay? And let's say I calculate the Kwong relief to be $5,000. So I can make a payment of $5,000 or $10,000 towards it. My Kwong relief claim will still be an abatement, not a refund, because it's not going below the balance, the existing liability. So then you still don't have that July 10th, 26 hard deadline. So you can still make payments. The question is, if you apply the claim, does it generate an overpayment? If it does, generally has to be by July 10th, 26. Again, there are exceptions.
Great.
But I think there's a question from Ricky.
Can I make a payment and say tax only? That
Right.
was my question.
Well, I don't think that particularly matters in this case. Do you disagree? Because I think the refund statute is the refund statute. It looks at payments made, not necessarily how it was applied. Now, the application may affect accruals and things like that, but I don't think it'll affect the refund statute per se.
Well, not the refund statute, but will that help lower the penalty and interest?
Oh, yes, of course.
Yeah.
Yes.
No, okay. So that being the case, which is what I was kind of going and hoping
Okay.
for, how do I make that payment Online, it doesn't give me an option.
Well, if you want to actually designate a payment like that, unfortunately, you are mailing a check with the instructions either in a cover letter and on the memo line. The IRS has, I don't know if you heard, but they're not taking checks anymore soon. But they haven't updated their systems to do all the things we need to do by check.
Fun. David, do you want to join in this one or you want to move on? It's your call.
Do you want to talk about international information returns in Kwong?
I think part of the problem with the international informational forms is, at least the ones that I've encountered, the penalty is going to be imposed at one time or another because they're being filed several years late.
Right.
So it doesn't matter if Kwong applies or not, they still have a late filing penalty whenever they get around to filing.
But would you agree that if a late 5471 on a 21 return was filed early 23, that would potentially be abatable?
Oh, absolutely. But, and this is just from my own experience, in those instances where I've already encountered those penalties, I've either had them abated under reasonable cause or first time abatement. I can't now then go back and request, can you abate under Kwong? They're not going to do it.
Well, I've been actually asked that. I used FTA. Can I go and now ask for Kwong to preserve my FTA? I don't think that's going to happen.
Well, by now, if you used FTA back in 23, you'll be a virgin again within another year or so you should be okay.
Right.
Yeah, the FTA folks have failure to file, failure to pay, failure to deposit. That's the first time abatement penalty, and only in tax law, or I shouldn't say tax law because it's not, but only in the IRS rule book do we get to be a virgin every 3 years. So let's move on from, oh, you have one more thing?
Just want to add one little tidbit to the FTA conversation. And this is a known systemic problem that's been around for a lot of years, and Taxpayer Advocate has pointed this out. IRS will always look to FTA first, even if you think you have reasonable cause and you make a reasonable cause argument. If you have FTA available, they'll give you FTA and move on and have a nice day.
That is the unfortunate reality. So if you have reasonable cause for that failure to file, deposit, or pay, you want to fight that reasonable cause, and I would not call practitioner services to do it. What is it, 843? File a Form 843 and request a penalty abatement for reasonable cause versus calling PPS where you can get that. A lot of times PPS will give us a FTA on the phone.
Correct. Yeah.
They will not give us reasonable cause on the phone. I have not been successful. Have any of you guys been successful getting reasonable cause on the phone?
So by policy, I do not do reasonable cause on the phone because I don't, this sounds terrible, but I'm sorry. I don't trust the other person on the line to get what I'm saying. I want to put it in writing with documentation, and I want to make it as a compelling sob story for whoever is reading it at the IRS Service Center.
Get out the tissues, put them in the envelope with the letter.